Hi, welcome to Urban Insights. I'm Jayashree Guru. I have with me Mr. Kalpesh Dave. He's the CEO of Star Housing Finance Ltd. And what we're discussing today is the affordable housing scenario in India today. Thank you, Kalpesh, for joining us. Uh,
Yashi, pleasure is all mine.
uh, Kalpesh, let's talk about the lending profiles that you have. Who is borrowing today? A lot of consultancies say that affordable housing is a mere 15-16% of the lending today. But you have done well. You are now going to list on the NSE after the BSE. So, what is happening in the affordable housing perspective from your view?
Sure. So the term affordable, when you speak affordable housing, then it means that it is retail in nature. First of all, okay, it is low ticket size in nature. Okay, not your typical 50, 75 lakh or 1 crore loan for that matter. So it is low ticket. When you're talking about low ticket, we are typically speaking about sub 25 lakh category in tier 2, tier 3 towns, and sub 35 lakh category in the metros like Mumbai and Delhi for that matter.
Hmm.
So that forms the crux of whatever affordable housing in terms of financing requirements come to the fore.
Hmm.
So that is pure play affordable housing. Affordable housing, Jayashree, has often been misused because there are people from the city centers also who might want to purchase an investment home or a second home for that matter. That also kind of gets categorized into the one, but that's not the true affordable instance, right? So you
Right.
have to then focus on who is the ultimate buyer of this particular unit, what is the purpose of it, so on and so forth, and where it is getting purchased. So, from that particular perspective, a typical borrower would be coming from an economically weaker section, low income group segment.
Hmm.
When we are talking about this particular category, you are talking about, the ones who are having disposable income, the
Right.
income that they have in hand of around up to 50,000 rupees per month. Okay,
Hmm.
that forms the crux of the borrowers, the nature of that particular borrower. So this economically weaker section, low income group segment would invariably be the first time home buyer.
Yeah.
Okay, invariably it would be the one who would be wanting to come under the ambit of formal financial inclusion.
Hmm.
If not for institutions like, let's say, Star Housing Finance or any other for that matter, these borrowers would have typically taken loan from informal sources, maybe a money lender or for friends and relatives. So
Hmm.
that's where the formal financial inclusion come to the fore. That is the one, and the unit that they are purchasing are the ones where they are going to ultimately live in. So it is end use driven. It is not for the purpose of investment for that matter. So that basically forms the borrower side of it. I told you about the ticket size. I told you about the borrower size. I will now touch upon the unit. Unit would be typically ranging from around 30 to 45 lakhs in terms of its cost. Now that unit can be self construction. The person would want to basically construct a home on own land, or in the wake of the current post COVID-19 pandemic scenario, there are a lot of tier 2 tier 3 towns which are coming up with affordable housing projects. So these would be again G+2 kind of a construction, wherein there is a 2025 units are getting constructed, and these units are getting purchased by these end users. So that is a type of the unit size that I wanted to tell you, defining the third part of it. And the fourth part of it is the geography of operations. So these geography of operations, as I said, would ideally be tier 2 tier 3 locations, semi-urban locations. Okay, not purely rural in nature, because rural comes into the ambit of around sub 5 lakh category, which would kind of go into having a contour of a microfinance kind of a thing.
Right.
So it is not traditionally microfinance. So tier 2, tier 3 towns, semi-urban locations, and extended metros, mini metros locations would be basically the geography of operations. So these are the four characteristics of a typical, affordable housing finance per se. I hope that answers your question, Jayshree.
Absolutely. Now let's talk about the borrowers. Has the volume of borrowers increased, decreased? What do you see from, say, 2019 to 2025? Just run through the profile, the volume of buyers.
So see, these buyers have been around, Jaishri, since the time there has been a formal financial institutions coming into the play. So this segment is not new as such, Jaishri. Okay, there is a demonstrated history of around 4 to 5 decades where these borrowers have been availing loans, and more importantly is that it's not just a typical affordable housing finance institutions who basically cater to these borrowers. So when you talk about these institutions, it would range from public sector banks, private sector banks, who are basically mandated by the RBI to open new branches in designated locations as per the guidelines. So these are also the ones. There are big ticket HFCs, there are NBFCs, there are regional rural banks, there are cooperative credit societies, there are cooperative banks, and then there are HFCs like us as well. So all these players basically cater to the home owning aspirations of these borrowers. And as you rightly said, 15 to 16% of the loan book of these institutions would be having affordable characteristics. And for institutions like Star, it would be pure play. 100% of the book would be in this particular one. So there has been demonstrated history. There has been a demonstrated repayment behavior of this particular segment, and hence the slicing, cutting of data is possible also by the rating agencies and by other analytics as well. So this is the history. But very, very rightly, as said by you, post 2019, there was a kind of a blip between 2018 to 2020, 21. More importantly, the kind of sweeping changes that were happening on the financing landscape, as well as the impact of COVID-19 pandemic, basically, which kind of threatened to disrupt this particular segment. But what we have seen, Jayashri, is that post 2021, there have been several factors which has contributed to the growth, and growth has come back with a bang. It's not that this segment can be categorized into pre-COVID or post-COVID era. The demand remains the same. That is something which is very, very heartening thing that I would want to tell you. This segment is growing at around 35-40% CAGR even after COVID-19 pandemic. There are kind of factors which are contributing to it. So post-COVID era, there has been reverse migration of people, okay, from the urban city centers onto their closer to their native places. Okay, that is something which has basically contributed as the first part of it. As these families, and these families would typically be those aspirants who would now want to explore newer opportunities coming up in the tier 2, tier 3 towns. So these families basically decided to go back to their roots or be closer to their roots. So that reverse migration kind of has helped. That's the first thing. As they go, they take the contours of the city kind of a lifestyle onto the tier 2, tier 3 towns. So they would want to remain nuclear. So the nuclearization in that semi-urban location is also kind of contributing to the demand for the housing for that matter. That's the second part of it. The third part, Jayashri, is the infrastructure development which has basically happened. So these otherwise hinterlands, we would have called them, now are very well connected to the main city centers for that matter. Okay, that courtesy to the government's thrust on the infrastructure since past 10 to 15 years, these are now very well connected. So if you talk about my hometown, earlier it would used to take around 4 hours to reach to the main city center. Now it's within 2 hours you are able to reach. So that mobility is also helping in terms of that. So that's the infrastructure development that I want to talk about. And the fourth part of it is the digitization. So now, internet is available in all nooks and corners. In fact, it's available on your, in your hand through mobile devices. So that connectivity has also helped. It has, brought more formal lending institutions into the mainstream, keen to explore this particular segment as well. So that has also, supported the demand of, for housing. So when there is a demand, obviously you will find that, there are a lot of developers who want to, come into this particular space. Consequently, the supply side dynamics is also kind of trying to catch up, in this particular space. So all I would want to say is that post COVID-19 pandemic, the situation has been really, really very good. Okay, there has been a consistent demand for these low ticket units. as well as there are more and more developers also who are coming into the into these particular locations, and this is evidenced by the new launches that happen every now and then. And most importantly, what you have seen is that H2 is the one post Diwali, you find a lot of activity in this particular space. So that's the answer I would want to give to you, Jayshree.
Okay. Do you also lend to low-income housing projects?
No, so we are pure play retail lending organization. We don't do wholesale lending.
Hmm.
We provide housing finance assistance to the end users. We don't have any exposure to that particular side.
So when the consumers come, could you break it up to the consumers who are buying off the formal housing market and the consumers who probably own land in these smaller cities, or it is existing houses being upgraded for newer this thing. What is the breakup of that?
So it's a two-third would be, self-construction or would want to upgrade the house, and one-third would be, towards the, purchasing the projects, purchasing the units in these newly launched projects. That is the, distribution that we have seen. As very rightly said by you, home extension improvement, as we call, upgrading the existing unit, that also, is increasingly getting contributed to the overall loan book buildup in these in this particular category. So when this particular customer segment moves, decides to move, let's say I want to be to my hometown only and only, and let's say the hometown is now tier 2 location. Previously it was a village, now it is a tier 3 location. So you will say that why would I want to purchase a new unit? I would basically try to improve upon my existing dwelling. Okay, it might be a kacha house and I want to just refurbish into a pakka house. That is something which is also contributing. And also the fact that if the existing dwelling unit is completely non-refurbishable, that and they want to break it down and basically reconstruct it, so that also is contributing, Jayshree, just to answer to your question.
So
Yeah.
what are the ticket sizes typically?
So typically the ticket size would be around, around 13 to 15 lakhs. That is
Hmm.
something, that we have seen. In terms of extension improvement, it would be, sub 10 lakhs, given that, there is already a construction in place.
Hmm.
And in terms of, unit purchase, it would be around, 11 to 13 lakhs. This is the kind of a typical ticket size that we are seeing.
And this is across cities. Say a city that is closer to a commercially viable town, and those that are small town market city market.
Plus or minus 25%.
Oh, oh.
That
And
would be the typical thing.
which are the geographies you lend in?
So we are operational in the states of Maharashtra, Madhya Pradesh, Gujarat, Rajasthan, extended NCR through Ghaziabad extension, Noida, so on and so forth, and also in the state of Tamil Nadu. That's where we operate.
Okay. Why only Tamil Nadu in the south?
So Tamil Nadu becomes an obvious choice, Jeshi, given the fact of the matter that if you talk about the demand for housing in terms of affordable housing units, number one comes Maharashtra and number two is Tamil Nadu, and hence Tamil Nadu becomes an obvious choice for us. While there is a language barrier, dare I say, I'm not being rude at this particular thing, but that language barrier is kind of compensated by the staff who are in this particular geography of of Tamil Nadu since more than 1.5 to 2 decades. So that kind of compensates. That
Yeah.
local know-how is there, and hence it becomes an obvious choice for us.
When I used to do property research in Magic Bricks, one of the things that always struck me was that Tamil Nadu, the search patterns was always, the affordable search patterns was very, very robust. People would search for 5 lakh, 10 lakh, 13 lakh. So, which means that when a consumer searches, there's something in that market which is catering to them, right?
Obviously, there are a lot of homegrown HFCs also who have been operational over there. And they are doing excellently well because they know the geography much better than anyone of any other people.
Right. And this does not happen in the other southern states.
I would say, the microfinance revolution has kind of touched Andhra and Telangana for
Yeah.
that matter.
Yeah.
Karnataka is becoming more and more urban in nature. So, Tamil Nadu still has a lot of fertile micro markets where you can kind of explore.
Right. And do those in the informal sector also avail of your loans? And if so, how do you manage that?
So it's kind of a misnomer that it's an informal sector. See, when we are lending in this particular space, Jashi, we are not lending to a particular person, we are lending to a family.
Mm.
Okay. And when I talked about disposable income, I talked about family's disposable income and not one person's disposable income. So this particular typical family would have contours of formal, would have contours of informal as well. It's a blend of formal and informal. So it
Mm.
would be like, father has a, agricultural land where he's kind of growing crops and doing
Yeah.
things and so on and so forth. He has kind of allied agriculture, business also, which adds to the cash flow. There's a second part of it. The son is, working, let's say 35, 40 kilometers away onto the tier 2, tier 3 town. Maybe he would be a blue collared worker, or he would basically be a junior supervisor for that matter. That form that gives a formal characteristic to it. And obviously the women of the house would either be in the cattle related activity, or would be having kind of a shop just in front of the house. They would be either having a kirana store, or it would be a tailoring business for that matter. So this is the broader. It is not just it is very unfair here to understand, to segregate between informal and formal, because these are the aspirants, these are the ones who are trying to move from the bottom of the pyramid onto the next level, where they would want to improve their lifestyle. And
Mm.
when you are improving the lifestyle, the first three things, basic things, has to be basically consummated, which is roti, kapda, and makan. So makan then becomes the crux of their overall scheme of things. So that's
Yeah.
the kind of typical customer segment, Jesh.
And how long do they take the loan for?
That's a very good question. While the loan at the time of origination is around 15 years or so, this segment does not keep it for long. The repayment behavior is pretty much in line with a typical mark to market customer. They would want to close the loan within 7 years or so. That's a typical repayment behavior. So
And there's no pre penalty for prepayment.
no, I mean, if you're talking about fixed rate loans, there would be prepayment charges, the exit charges. In case of floating rate loan, there would be no prepayment charges. So it's in line with RBI guidelines that these players operate.
And what percentage takes floating loans?
Again, that depends. So, ideally, if you talk about Star, we offer fixed rate loans. It makes sense to us for the fact of the matter that this customer segment is not necessarily financially educated. It's the first brush towards the formal
Mm.
financial institution. So, what do they do is that they understand in terms of EMIs only.
Right,
So, if they will say that on 1 lakh, how much is my EMI?
right.
So on 1 lakh, if I am paying, let's say, 12% or 13% for that matter, so that is something they would want to remain put in that particular one. Any changes, any increase or any decrease would kind of disrupt in their overall scheme of things, and then they would come back and say that your rate of interest was lower, and now again you have increased. What is the reason behind it? And they would not understand the nuances of effect of repo rates, and or so on and so forth. So it makes sense to define the EMI right at the outset and make them continue. More importantly, it is our responsibility to inculcate that financial behavior, and that's what we try to do through the loan life cycle, Jesh.
And typically, what is the rate of interest for these
So
loans?
that ranges, that depends on on institutions to institutions, depending on their borrowing costs. So it would be ranging from around 12 and a half, 13% to even 18, 19% as well. So there is a spectrum. It's
Okay.
not one for any particular lender. So depending on their borrowing costs, they would charge the rate of interest to the ultimate borrower.
Okay. So this is actually giving this family a CIBIL score, right? This
Absolutely,
and
absolutely,
it's bringing them into the formal financially
absolutely.
and asset owning class.
Absolutely. So that again, the loan life cycle management is something which is very core to us. We also consider it as our responsibility to inculcate that financial education to that customer. We
Wow.
try to explain to them what is CIBIL, what is ACH, why you shouldn't bounce,
Yeah.
why it makes sense to be regular in the repayment without bouncing. What will happen if you basically stay put for about 1.5 to 2 years without any bouncing? So your CIBIL increases, your chances of balance transferring out of the company and availing a lower interest rate loan. That's something we do every week with our set of customers.
Okay. And you don't see any delinquency in this segment. They're very careful.
Delinquency is part and parcel of life, Jashi. If
Uh,
there is no delinquency, then there is certainly something wrong in my credit underwriting process,
right,
because we all are human, we are not divine. And you
right,
have to understand that this customer segment is more prone to any of the disruptions, that would be
right.
coming, be it macro or micro for that matter. But what we have seen is that, this customer segment has resilience.
Mm,
This customer segment has that kind of truthfulness in him or her. And at the same time, to understand that, if the unit is end use driven, if it is purely and purely for purpose of staying, they would not want to default. None of us would want to default for that matter. If only and only for, some unforeseen circumstances are there, that is something, we also do understand. But yes, this particular customer segment has shown resilience, continues to show resilience, and delinquencies, would be in line with any of the ICRA or CRISIL estimates for that matter.
okay, okay. And do you see this growing, the borrowing here growing as you go along?
Yeah, so good question. As I said, that nuclearization is aiding. Okay,
Yeah,
development of industrial towns adjacent to metros and mini metros is also growing. When we started, with the launch of PMAI, it was being said that around 6 crore houses are going to yet to get constructed. We are now into PMAY 2, and still there are 4 crore houses yet to
yeah,
be constructed. So you have kind of completed your target, and there are again 4 crore houses which are coming to the fore. Okay.
yeah.
And you have to understand that this will continue. Okay,
Okay.
this will continue for the fact of the matter that the aspirant population, the people who were kind of below the poverty line, now are kind of increasing in terms of their income earning capacity as India grows. And you must have seen that even the World Bank estimates have shown that the below the poverty line kind of has decreased in India by
Yeah,
around, I think, around 20-21 odd percent. So that kind of delta will always be here, Jashi. Okay, and I would envisage that past our lifetimes also this particular customer segment will remain. And with that 4 crore houses, once you get it constructed, let's say in around 7 to 8 years, there will be still 4 crore more houses coming to.
yeah,
So it
yeah.
will always be remaining. Yeah.
And uh, do people who come to you to borrow, they come back to you to borrow for a second house? Is that
We
happening?
ideally don't purchase, we don't, I'm sorry, we don't ideally, fund a second house purchase for that matter. We have not seen that particular behavior in my customer segment, till now what I have funded, you have
I'm
to,
taking off from what you said. A family borrows a house, they upgrade or they rebuild or they build
yeah.
a fresh house, and then the younger generation wants to become turn nuclear, maybe within the same city or maybe in a different city. Do they come back to you? And do
So
you?
that will be around 10 to 15 years from now. So we have to kind of see that particular behavior how. But yeah, this the children of these borrowers are studying in a good education institution. Heartening to see that this the parents are very very keen to have that formal education being imparted to their kids. And definitely, once they come up the curve, star housing would be the one to fulfill their ambitions, subject to all the norms being met.
Okay. Kalpesh, thank you so much for discussing this with us. We are also planning some live sessions with consumers from around the country. I would love for you to come back to us and maybe take some questions from consumers at the,
Sure,
yeah.
sure,
Thank
sure.
you so
Pleasure
much.
is all mine, Jeshi. Thank you so much. Thank you.
Thank you. Bye bye.